Good morning. This is Larry McMillan with the stock market update on Monday, August 29th, slightly before the market opens. So last week, SPX and the broad market gave notice that it's still in a bear market. Fed Chairman Powell's speech on Friday was reacted to in a very negative manner, and SPX closed below the support at 40.70. We're probably going to test 40.20 support this morning. 3,900 would be the next level. If that fails, then we're probably going to test the yearly lows down below 3,700. This is not just the reaction to his speech, though. This has been coming with a number of negative signals building up along the way, including the fact that SPX could not break through the downtrend line of the bear market when it challenged the 4,300 level 2 weeks ago. We have sell signals from the McMillan volatility band, and that will remain in effect until SPX reaches the -4 standard deviation level, which right now is at 39.70, but that's a moving target. It's continuing to decline. Equity-only put-call ratios are split. The weighted ratio, which depends on the dollars being spent on bullish opinion versus the dollars being spent on bearish opinion, that turned negative about a week ago in a very timely manner. The standard ratios, which just look at the volume of puts versus the volume of calls, and that includes not only our equity-only ratio, but the CBOE equity-only ratio, and even the total put-call ratio. None of them have really given sell signals here. They're kind of meandering at relative lows. Normally that would be a buy signal. Obviously, we see that has not been the case. So the weighted ratio is dominating right now. I'm not exactly sure why, but it certainly has to do with small traders versus big traders. The next indicator we look at is breadth. The breadth oscillators are on sell signals. We did have a one-day blip back to a buy signal and then back down again, which we've seen before in the stocks only indicator. So we're waiting until both of these confirm rolling over to buy signals, which they are really not close to doing right now. So they're both bearish. The new highs versus new lows, that has been bearish all along and it continues to remain bearish. Now, we've had some bearish developments in VIX this past week. The VIX spike peak buy signal did occur on Thursday and was stopped out immediately on Friday. A new one will occur soon. VIX overnight now is traded up above 27. So if VIX falls back 3 points from that high, that would be a new VIX spike peak buy signal. But we saw the last one didn't last not even a day. Meanwhile, the trend of VIX is no longer bullish. That is, VIX itself is closed above its 200-day moving average, and so that stops out that buy signal. That, however, is not a sell signal. We need to see the 20-day moving average of VIX cross above the 200-day. That's not going to happen real soon. But still, this is a bearish development in VIX, and frankly, we haven't seen VIX react this strongly to much of the selling earlier this year, but it certainly has now. So all in all, we're maintaining that core bearish position. We will trade other short-term signals around that. And so I invite you to visit our website and take a look at our daily newsletter so you can keep up to date on these things. And meanwhile, have a great pre-holiday week and then have a great holiday weekend coming up.